Hey, we're live back for another episode of Token Narratives. I'm Graham Stone, joined by David Sensel, the news and research gig brain at Bitcoin.com News. The markets are not doing well. Bitcoin has crashed to as low as, what was it, 62, I think was the lowest. It's bounced, sort of stabilized here in the last day. Currently, the price of Bitcoin is below the fabled rainbow chart. It's below the lowest band in the rainbow chart for the first time in rainbow chart history. We're in unprecedented bear territory. Let's get into our sentiment check. David, I see in the doc here you've got a 7-point monologue on why everyone's crying.
Okay, yeah, well, let's first start with a little prelude. Uh, 2 weeks ago, Algod, the famous Algod who had the back and forth with Do Kwon, your size is not size, that guy, um, he said, this must be one of the worst sentiments I've seen in crypto since I joined a decade ago. Hopes and dreams are lost. Everyone realizes it's a scam, and retail rather allocates to stocks than to our vaporware shitcoins. We need substance ASAP. Patrick Scott, revenue and growth of DeFi Llama, he said, sentiment isn't bad. It's just non existent. Crypto's cultural presence peaked 5 years ago. Vibe coding replaced it as the way to get rich quick online. AI and space stocks replaced it as the way to beat the market. For an 18-year-old today, crypto is something that their friend's weird older brother was into when they were in middle school. Okay, so these were 2 weeks ago. I covered this in the weekly newsletter 2 weeks ago, and honestly, at the time, I I didn't agree with this, right? Like I thought that uh, crypto has had, even the cycles that I've been has felt much worse. So TXMC, he disagreed with this as well. He noted that this is all recency bias, right? People have short memories. Post FTX in 2022 was a lot worse. It was more existential. Now it's bad, but not that bad. So fast forward to today, and honestly, I've kind of come around to this idea that maybe sentiment is the worst it's ever been in crypto. Again, this is not. I'm just toying with the idea. I'm not sure if I actually believe this, but again, I can kind of see, I think, what these people are saying, and I'm going to lay out my theses for this. So before I go into this long diatribe, monologue, as you say, do you have anything to say to what I just laid out?
I'm interested to hear your 7 points, but just my gut feeling is it'll be fine.
Okay, well, here we go. Now, again, this is sentiment, so this is not a prediction of what of will crypto survive or not. This is just a kind of um, how the market feels, and I actually, I guess I should preface this with, I don't feel this way. I'm quite optimistic, but maybe after I lay this all out, you'll see why I am optimistic and why this kind of comports with how I've always felt about crypto in the world. In any case, all right. Number one, for why this is maybe the worst sentiment in crypto's history, institutions are here, Graham, unequivocally, demonstrably here. Very good thing. However, OGs are disillusioned, right? The cypherpunk dream feels well and truly dead for many. Um, you have OG whales selling, you have OGs leaving, going to AI or whatever. I think in the past 2 weeks, the best example of this idea that OGs are disillusioned and institutions are here is this EF drama. Um, the EF, as we talked about, was it last week or the week before? They have attempted to kind of reaffirm the primacy of these cypherpunk values, right? With some of the stuff that they've put out, and the end result of that has been, it just kind of feels childish. It feels a little out of touch, right? Which to me demonstrates that the vision, this original OG vision, is well and truly dead or compromised, something like that. So that's number one. Number two, crypto devs, developers who work in crypto, are depressed and or gone, right? Because institutions are here, because Web 2 company developers are now interested and working in crypto. Crypto native devs are having to play on like an even playing field. Before, it was their own little sandbox, and so their lack of world-class developing skills didn't really matter, right? Because there was no competition. It was a competition amongst redacted folks. However, that's not the case now, and the crypto native devs have to compete with the elite devs of the world, and they're not looking good for them. And the products that they're making are more like toys, not like real products. So this is the third point. Institutions are here. Web 2 and institutions want real products. So crypto products, in a sense, have to grow up, right? We need real products. We need real product market fit. And the crypto native devs are just not good at making stuff like that, right? Like they're good at making experiments, making little philosophical kind of Ponzi schemes or this kind of stuff. Or there's a lot of straight up scammers. That kind of stuff doesn't really work now. It doesn't look good. There are select few products that have experienced growth and price appreciation, but that kind of that shows the difference between where crypto was, where anything that had any kind of interest would rise. I'm thinking about, like, for example, the 2021 cycle, where every alt L1 under the sun went up, 1,000x kind of thing. Whereas now you have to have a good solid project with superstar devs, and everything else is just a wasteland, right? There's no spectrum. It's either you've got it or you don't. And again, this is making a lot of people within crypto depressed. Speculative money is almost completely out of crypto. It's in equities, right? It's in AI and space stocks. Meme coins, shit coins, altcoins, even some of the majors are all down or dead, right? The people who remain in crypto, stubbornly remain in crypto, they're trading perps and RWAs of equities and commodities. They're not even really trading crypto coins, right? So the interest from speculators for crypto assets is basically zero. Okay. AI has the aura that crypto once had, right? The aura that this thing will massively change the world. This is like a world-changing thing. The world will not look the same after this thing has matured. That aura used to be crypto, and it feels like it's moved on to AI. Not only does it feel like it's moved on to AI, many people I've talked to and seen posts online, it feels like AI is delivering, or has already delivered, more on this like world-changing thing than crypto has in more than a decade, right? And so for true believers, I feel like this is like a mental blow, right? It's humbling and frustrating, to say the least, to devote your life to something and have your focus be on it, and then see that the next new technological paradigm comes along and it actually is able to deliver on it in a much shorter time than the thing that you've been working on for so long. I personally have felt this a little bit, right? That, wow, this AI thing feels just like a bigger deal than crypto, right? And crypto used to be that. It used to be, this is the big thing. We're changing money, right? And I feel like that mantle has passed on to AI. AI has also made DeFi unsafe. Of course, it's not just DeFi, but Web 2 software, these kinds of things don't hold within it like bearer-like assets, money-like assets, where a bug or a flaw can have like instant monetary transfer. So it makes DeFi particularly vulnerable. Not only that, but of the things that crypto has kind of truly transformed or changed, DeFi is maybe one of three pillars, right? You have like stable coins, perps, and DeFi. I would say those are the kind of the big three things that you could say up to this point, crypto has absolutely had a massive effect on the world. DeFi is one of them. Well, now for the foreseeable future, for the next couple years at least, maybe more, DeFi is going to have to stagnate, or at least not really grow, right? Because this AI security vulnerability cycle is going to continue for a while until we get a couple of things. Number one, all the teams are going to have to make security, I think, their number one priority. They're going to have to adopt TradFi-like apparati, whatever, right? Things where you have like time locks and maybe some reversibility built into some different pieces and parts. And then obviously like verifiable programs, or verifiable code, right? So you can kind of have provably bug-free code, things of that nature. Until those things get worked out, which will take years, I don't see DeFi really playing a major role for the foreseeable future. Who is going to take that kind of risk in size? Not going to happen. So DeFi is kind of sitting on the bench for the time being, right? Big blow. Finally, we are in a bear market, and it's normal for everyone but the diehards to leave during a bear market. However, this time is different, though, isn't it? First of all, crypto obviously has down-only price action. However, this is paired with up-only euphoric price action in equities. Ugh, like having that comparison right next to each other, that's kind of, this obviously terrible, right? The decoupling is here, Graham. However, it's not in the favor of Bitcoin and crypto. So retail and speculators are gone, and they're having a great time right next door, and you can hear about it, and it's everywhere. And the OG true believers are disillusioned and churning. They're being replaced by a new guard who are optimistic, right? You have these new entrants. Hunter Horsley had a good tweet this past week basically saying that, right? Like crypto, I think to paraphrase, is something like crypto will look fundamentally different 1 year from now. Crypto and crypto participants will look fundamentally different 1 year from now. I think he's right. When I go to conferences, there's a lot of optimism, but these are people who have just joined, and they're from like Web 2 and they're from TradFi. And so I think during this transition period right now, perhaps it is kind of the perfect recipe for kind of the worst sentiment that has ever existed in crypto, because everyone who built this industry, these diehards, these people who have this kind of maniacal view of what the world should look like, this libertarian kind of cypherpunk view, they're getting washed out, or they're gone. And if they're staying, they're having to modify or kind of begrudgingly accept what the world will look like, pragmatically speaking, moving forward. And it won't be this cypherpunk world. It'll be this moderate step function increase in how the financial system works. It's not going to be this kind of cypherpunk vision of the future. And so all of these things kind of join together to create, I think you could argue, the worst sentiment ever. And the reason that it's worse than 2022, the FTX thing, is that true believers weren't swayed by that, right? Really, it was retail and institutional people who were disillusioned by 2022. This doesn't work. Look, this failed. And then retail and those kind of people who had just dipped their toes, institutionally speaking, into crypto, they went away. The true believers and the crypto devs, they just kind of hunkered down, and they use that time to build. I think that this is very different, and so that's why I would make that argument.
All right. Cool story. You said at the start of your monologue that you're actually bullish. So, having said all those depressing points, where does the actually bullish thing come out of it?
Well, I mean, Graham, you've known me as the wet blanket forever, and ever since I joined crypto, I fought tooth and nail for exactly kind of what I said, which is crypto will not change the world in the way that these people think. It will be a moderate improvement, just like the internet was a moderate improvement. It's not going to be this transformatively great thing where banks are replaced and the powers that be that own everything are going to be disrupted by these new folks. I've said that from the beginning, and I think because that's how I've always felt, I'm not depressed by the fact that that vision looks to be coming true. And I think the thing that makes it so hard for all these people is in crypto is that they're getting more and more evidence that what I've always thought would happen is happening, right? Like you're going to get a moderate improvement, and that's about it. And who's buying everything? It's institutions, it's banks. It's these people with a lot of money who are doing that, and who's selling? Well, it's all the people who've been holding this whole time. And so it's I can see why this early guard who built the industry really are depressed now. But again, I agree with like Hunter Horsley or Haseeb Quresh, friend of the show, who have said he's basically said a similar thing, which is, yeah, this is always going to happen, right? Stablecoins were always going to be the thing, right? That is used, and it's a hard pill to swallow for folks who I guess maybe necessarily had to have a strong kind of not utopian, but like this strong vision of the world, and now having to deal with the reality, I think would cause a lot of problems. I mean, how about you? Like personally, how do you think, from a sentiment standpoint? How do you feel? Because I don't feel depressed really at all. I think
Yeah,
we're in up on
I feel like this most recent downturn. I feel kind of relieved that it's hit because let's get it out of the way. It's kind of expected. And speaking about like, in previous eras, it was so easy. I guess you could say it was easy to get ridiculously rich in crypto, right? But during those eras, I did not get ridiculously rich in crypto, and so I always felt this like FOMO, like and then I would make really dumb decisions, like I don't know, buying Ave at the Pico top or whatever, right? It's like, oh, it's gonna be the future, and then now that FOMO is gone, so I don't feel FOMO to like ape into these ridiculous projects. And the people who are promoting those things and creating all these like pie in the sky projects, they're also kind of disappeared because they realized that finally uh, no one's buying into them, and there's no point. And so now it feels kind of like, okay, maybe I actually do have, as someone who's still paying attention, actually maybe I do have an edge now. I can see it's like fairly obvious which projects will not die, hype for example, and I can get into those while institutions can't as easily, or like most people who stop paying attention to crypto have no idea what hype is. And I know it's going to sustain. So it's like I feel confident uh, buying, like speculating on a few of these like actually quality projects. Whereas in the past, I just would like felt pressure to ape into things, which was turned out to be dumb decisions. I was always late to them. So I feel like I have a bit of a with this, yeah, with this sentiment being so bad, prices being down everywhere. I feel like clear headed. I can make a clear headed investment decisions. And yeah, on the Bitcoin front, I'm like I feel more confident buying at these levels. Um, it's hard to do. I saw a chart earlier that it was like, um, the fear and greed index, and when Bitcoin was at the price that it currently is in 2024, at like 65,000 or something, the fear and greed index was extreme greed, and now it's at that price, and the fear and greed index is extreme fear. And what's happened between 2024 and now? Yeah, Bitcoin is like arguably in a better position. Uh, so, and I still feel like more confident with my holdings and maybe adding to them. So, yeah, what else? What else what
Yeah.
else is on your mind on this?
Well, the only other thing I would say is I think you touched on something that also makes a lot of people who are in crypto, like these crypto natives. Again, remember we're in a bear market, so the people who are left, they in previous cycles they had conviction, right? They had conviction and they stayed around. But you have people who they have heavy bags of, I think in previous cycles, things that they would assume would go up again.
Yeah,
So, like
the
for example,
ordained tokens, ETH,
yeah, yeah,
whatever.
ETH, and maybe like Solana. I mean, these are
Yeah,
not small. These are projects they carry a lot of weight. But now, I feel like there's a real kind of consensus building, a maturity within it. It's like, oh wait, these institutions are not going to buy our bags. They're simply not,
yeah,
right? So then, who is going to buy these? Well, probably nobody. And so, this is not to say that the networks themselves aren't valuable and the things that
yeah,
they do, but the valuations they are at now, or like reaching all-time highs, that might not be in the cards ever. This is not to say that it won't happen or it can't happen, but I
yeah.
feel like there.
Well, I I I think like I feel better. I feel good about that because to me it never made sense that the Ethereum network or Solana, like their tokens would be trading at such premiums. And so I just always felt like I guess I have to hold this because I'm gonna feel I'm gonna be missing out if I'm not. And now it's like, yeah, don't hold those. Sweet,
Yeah,
good.
yeah, yeah, yeah.
I hope the network continues, but it's not an investment.
Yeah. But what I'm saying though is I'm trying to explain why I think another reason why I think sentiment in general is so low right now is that, yeah, again, it really does hit, all these things are hitting the people who have remained in the industry for so long, and so we're getting like this kind of really fundamental shift away from how pretty much I would say insiders view the market, right? Like anyone who's been around for like a decade, like Al God said, there's a consensus building on how these things should be valued and what will be valuable moving forward. And it looks like most of what has been valued highly for the past decade plus is going to be like re-rated lower or
Yeah.
or stay low, right? And that's a tough pill to swallow for anyone who's been bag holding for however long, you know.
Yeah, definitely. You got to feel for them. Glad I sold my ETH.
Like you, I didn't make it. I didn't make it bigly, so it doesn't really affect me one way or another because I don't have any giant bags to protect. So I'm just like, oh, okay,
Yeah.
well, that worthless crap that I had before is still worthless. Yeah.
Exactly. So let's
Move
talk.
on.
Let's talk about a little bit more about Bitcoin, right? Let's shift
Speaking of
gears
worthless
here.
crap,
Yeah.
no, go ahead.
Yeah. So let's talk about the strategy thing. Okay.
Yeah.
So as everyone knows, strategy sold 32 Bitcoin, 32 BTC late in May, between May 26th and May 31st. Seems like the average price they sold it at was around 77K. They raised $2.5 million, right? So it's a tiny amount. The market did not appear to like this. So, I mean, that's probably strategy selling those 32 BTC is probably a big part of the reason why we've had this, call it a 10% drop or more in the last week.
I would push back on that, like we've talked about over the years. In
There's other
kind of
more structural
well,
reasons. This is
well, it's
just
a
what
cliche.
people point to for why it
It's
happened.
it's a cliche. Like it's like in a bull market, any news will only result in positive price action. In a bear market, any news, including good news, will only result in negative price action. So I mean, you know, if this is a bull market and the price is going up, this would probably be seen as a very bullish thing. Like, look, Saylor sold and the price went up. I'm ultra bullish now. Higher prices, right? Like, you know.
Yeah. No, that's true. But let's break down why we think, or what the theories are for why he sold, and what's happening here. So, okay, the strategy needs to cover dividends for their the STRC holders and other holders of the other preferred, what are they called? Preferred instruments, or there's STRC, what is it? STF, Strife, a whole bunch of them. They have a bunch of obligations that these things that that pay dividends, they have to pay those. Okay. So how can they pay them? How can they pay the dividends? How can strategy pay? One way, more sales of STRC. It's basically a Ponzi. Okay. They also have a US dollar reserve, and then they have business income. Okay. So what was this 32 Bitcoin sale, like a tiny amount? Was it really? Was it really to cover the sales of those, or is it just like one theory is that it's that you've been talking about. It's they're kind of trying to inoculate the market, get them used to the fact that they can sell these. Then there's another theory floating around that selling some of the BTC on their balance sheet is a necessary demonstration to Wall Street that their BTC balance sheet actually has value. I hadn't heard this theory before, but apparently it's a thing. Like, if they've never sold it, Wall Street's like, well, you've got this stuff, but you can't sell it, so it has no value. So I guess the theory is that, no, see, it has value. We sold some, right? So the Wall Street somehow can look at the stock, and that makes sense to them. I'm not sure if I buy that theory. David, have you heard this, or Am I even getting it right?
Yeah, yeah. No, I've heard something roughly like this. Or on a related note, um, so STRC is trying to track at $100, right? And so it's trading below that. Um, one of the things that they needed to show potentially was that they could raise cash to pay the dividend. Now they have cash already, but um, it's a confidence game, right? The whole thing is a confidence game, i.e., Ponzi. So, but basically, you need to show Wall Street, you need to show people that, hey, if we can pay this dividend, okay, so don't worry about it, we can pay it. So that kind of aligns with your theory. Now, do you mind if I lay out what Jeff Dorman said? I think he
Please.
was on a he was on a podcast, and I really liked how he framed this, and it it it's basically how I see STRC too when I've talked about it in the past. But basically, everything I'm about to say is going to be my recapitulation from Jeff Dorman. If I'm wrong, Mr. Dorman, please come at me and tell me I'm an idiot. Anyway, so basically, this all started. So to set the stage, this all started maybe a month or two ago. Wall Street was looking at this STRC situation where they have to pay, what is it, like 1.4 billion a year in dividends, and there were questions like, how can you pay this? So Saylor raised some cash. He raised to approximately 2.2 billion in cash, right? So he had 2.2 billion in cash on the balance sheet. Here, I have more than a year of runway to pay these dividends. Everything's good. Everyone in the market was happy. Jeff Dorman was like, great. This doesn't solve the long-term issue, but you have now a long way before this becomes a problem. The only other thing after the 1.4 billion a year is the convertible debt obligations that you have to pay in 2029. So 3 years away. Beautiful. Looking good. However, inexplicably, it seems, to Dorman and myself, he then, 2 weeks ago, we reported on this, right, Graham? 2 weeks ago, Strategy used 1.5 billion of that cash to repurchase the convertible debt early. Right, this is the debt that's due in 2029. This brought his cash balances to 700 million. Now, he had significantly shortened the runway for cash he could pay the dividend with. Right, it's like 5 to 6 months now. That brought us to the situation of today, where now Wall Street and STRC holders are like, wait a second, you now use this cash that I think he either explicitly said it or it was implied that the cash was going to be used to have the security to pay the dividend. Well, now you don't. You only have 5 or 6 months of runway for this dividend. We're a little worried, and thus began, and then selling of the 32 Bitcoin, 32 Bitcoin last week at the end of May. Again, as you said, why sell 2.3? It seems like a very, very small amount. I mean, not. It is an incredibly tiny amount. It's less than 0.1%.
Yeah, it's 0.03% or something.
Yeah. So this brings us to the situation today, and Jeff Dorman is saying basically, Saylor and Strategy are kind of stuck between a rock and a hard place, and the reason is you have Strategy basically has 4 investors, right? You have Bitcoin investors, and this is Dorman's kind of how he breaks it down. You have Bitcoin investors, basically anyone who holds Bitcoin. In some sense, anyone who holds Bitcoin, whether it's spot, ETF, or through a DAT, they have some sense exposure to Strategy, right? Because Saylor and Strategy are Bitcoin's biggest cheerleader. slash thought leader slash maybe marginal buyer or seller. And so Bitcoin investors have exposure to MSTR. So that's one, number one. Number two, you have MSTR holders, people who hold MSTR. Obviously, they are exposed to Saylor and strategies, um, things that they do. Then you have the preferred holders, the people who have STRC and some of the other things that you were talking about. And then finally, you have the debt holders, people who hold strategies debt. Now, the way this works in the kind of where risk is it goes from 4 down to 1. So the debt holders, they're going to be solid, right? The way the financial corporate structure works is the debt holders, they get priority first, then the preferreds, then the MSTR holders, and then obviously if you hold Bitcoin, you have there's no recourse for you. You just are kind of passively exposed to strategies shenanigans. So the debt holders are going to be fine. The preferred holders are going to be fine, no matter what happens. The MSTR holders, they might get hit, and Bitcoin investors will get hit. The problem, as Mr. Dorman sees it, is he has now engineered a situation where he can't keep all 4 of these parties happy. No matter what he does from here, one or more of these parties will be hurt by his actions. And I'm not going to go through every action that he could take, but let's say he sells Bitcoin, right? Obviously, this is going to hurt Bitcoin investors, right, in the price of Bitcoin. This will also hurt MSTR holders, right, because you're going to dilute shares per or satoshis per MSTR, right, something like that. It'll help the preferreds. It'll help the debt holders. But again, you could issue new stock to then pay the dividends. Well, obviously this is going to hurt MSTR holders. This might even hurt Bitcoin investors because confidence, but it'll help the preferreds. You could like the nuclear option that I've talked about before about this whole structure is you could not pay the dividend. You could just be like, yeah, we're not paying this dividend. We're done with that. Well, you'll never be able to raise preferreds again ever. Those markets would be closed to you going forward. But yeah, it would be fine for the MSTR holders, fine for the debt holders, maybe fine for Bitcoin investors, right? So anyway, you can go through any choice that he makes, and it looks like, at least in the short term, it's going to hurt and or piss off one of these four parties that are exposed to strategy.
Yeah, that's a good way to frame things. The way I see it, it's not really a massive problem, at least for Bitcoin holders. MSTR holders, I'd be worried. I think they're the most exposed here, the holders of the strategy stock. As you pointed out, they are lower in the stack. And then why do I think it's not a massive problem for Bitcoin holders? Well, it's because, okay, like, yeah, as you mentioned, strategy can fund those dividend obligations from multiple sources. And selling BTC is just one of the ways that they can do it. So, but let's assume that they take that route. And it seems that Michael Saylor is kind of hinting that that's what they're going to try to do by selling some Bitcoin here. I even in that scenario, I don't think it's that bad. So, like, let's just go through a thought experiment here, right? If they funded the entire preferred dividend stack, so that's the dividends they have to pay on STRC plus STRF, I don't know, there's a whole list of them. It's around 1.5 billion per year that they have those obligations, the dividends they have to pay. If they wanted to do that just by selling Bitcoin, and even if you assume that the price that they sold Bitcoin at was $50,000 per Bitcoin, so quite a bit lower than where we are now. and below strategy's cost basis, which I think is around 75K on average for all the Bitcoin they hold. So they're selling at a loss, right? And if they had to do that to cover all those dividends, it would only amount to having to sell about 30,000 BTC, or around 3.4% of their holdings. So it's actually, and that would they'd be able to fund the dividends for a full year just by doing that. So I don't know. It's like it doesn't seem like actually that much. 30,000 BTC. Didn't some whale like sell that much in like a day at the end of last year? Um,
Yeah. I mean, I'm not worried either. I don't think this is a big deal, and I don't think strategy is going to go bankrupt or any of this nonsense that I've seen from some places on CT. Um, so it's that aspect of the story seems kind of juvenile, where I mean, it feels like it happens every whatever 6 to 8 months. Strategy does something, doesn't even really matter what they do, and then people are like, "Oh, it's gonna die," and it's just even when they like raise money, right? They raise debt. Like, oh no, they're gonna die. I totally agree with you. I don't think this is a big deal. Um, I
yeah,
do
and
think maybe for sentiment, uh, when sentiment's already bad, it doesn't help. But kind of a
yeah,
nothing burger, really.
yeah, and I mean they've got time. They can worst case they'd have to sell some Bitcoin. They've got that gives them quite a bit of runway, and things could very easily. The narrative on Bitcoin could very easily turn around. Right? There's a million reasons why it could happen. I mean, I was just working on a documentary that we're going to be publishing in the next few weeks that goes into what happened in Cyprus in 2013, right? And people at like Bitcoin at the time rallied from like $50 to over $1,000, like kind of on that news, because the entire world realized that depositors, people who hold money in bank accounts, are their money is at risk. And uh,
Well, technically speaking, it's not their money, right? Like we've talked about
exactly,
before.
it's not even them.
When
And
you deposit
that
it
was
legally, that's not your money. It's an
and
IOU.
and that was legislated after, like, that legislation spread around the world out of that Cyprus incident. All the central bankers and regulators around the world saw that, and they're like, "Uh-oh, we better codify that that when you deposit money into a bank, it's not actually yours." And they did that. And so that's how the world exists now. And just wait until there's like the next financial crisis. There's a million things that could happen overnight. The narrative could shift, and suddenly it's like, oh, wait a minute, we need Bitcoin. Uh, AI stocks have been great. I doubled my money. Now I need something that can't be confiscated, and so that could happen overnight. And then before you know it, Bitcoin is like right back up to its all-time highs and beyond. So
Yeah. So one thing Dorman said, which I patted myself on the back for, was he was speculating on why Saylor did this, and I think, and I speculated on this, like why he was talking about selling before. Dorman thinks, again, he's mind reading, so obviously this is just an opinion or whatever. He thinks he was like, obviously Saylor and his team thought that we were near the bottom or at the bottom, right? And so they started trotting out this language of, oh, we might sell some Bitcoin. And then they actually sold some. And so he was like, yeah, this to me indicates that they thought, oh yeah, we can do this now. We're kind of entering the 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 beginnings of the bull market. And I have said exactly the same thing about Saylor and then my own thoughts on the market. So I think maybe um, they are not maybe probably right. It's almost certain that they're probably surprised with the reaction and with the price action too, because going lower because, again, I still believe that we're kind of forming a bottom here, and so it makes sense to me like that is kind of a good time to start selling. I mean, again, he has some time pressure as well, but like if you think that the bull market is starting or going to be underway soon, yeah, why not test the waters a little bit? So obviously, not the not the beginning of the bull market right now, but I think that's probably true for Saylor's motives and his teams.
Yeah.
Now, but here's the interesting thing. Again, talking about sentiment, you mentioned like this confiscatability thing. That actually, I think, has been one of the things really weighing on Bitcoin for the past, I don't know, 10 to 12 months, is that um, technically, yes, it can't be confiscated. But in practice, right now, in a world dominated by fiat, it can be, right? Because you can blacklist some BTC or this kind of thing. You can track it very, very easily. And I think this would dovetail nicely to the next topic, which is this is why privacy coins have kind of one of the reasons why privacy coins have done so well is that I think a lot of OGs and a lot of wealthy people who had a cursory interest in crypto have started to pay more attention to Bitcoin and crypto is because of this fear of confiscation that they see within their own government, like even within the U.S. And they look at Bitcoin and they say, "Yeah, not good enough," right? Because it doesn't have these
Yeah.
privacy features. And I, when I was traveling for the past month, it really got sold on this that
Yeah.
wealthy people who have a lot of money, they really care about this, and they're trying to hedge even a little bit from the government's, even the U.S. government's or the California government's ability to track and take their funds. Because how they can confiscate it? They can throw you in prison and say, "We know you have this Bitcoin. Give it to us."
Yeah. At the yeah, when you're talking about the big boys, yes. But there's a lot of people out there who are somewhere in between, and they're not like big enough to be singled out as a target to have their assets confiscated as long as they're holding in self custody. Uh, like there's not much that the state can do. And then moving into our next topic about which is about the
Well, but
Zcash exploit. I was going to
hold
bring it
on.
up as this could be the start of a new narrative, which is that actually this thing people have been pointing to privacy coins as like taking mind share from Bitcoin or taking potential investor allocations from Bitcoin. This new exploit that we're going to get into with Zcash could be the start of the narrative that actually privacy coins don't they're not auditable, so we don't know if like they're not as like provably scarce like
Yeah.
Bitcoin is, and so
Well,
that could be a new narrative that like is a tailwind for Bitcoin.
yeah. So again, I agree with you, but before we get to the exploit and some of the various things, I I I, I think it's very easy, unfortunately, for small people. Like you said, you were talking about the big boys versus people with smaller. It's very very easy, and it has historically been easy for people with Bitcoin to basically get censored with their Bitcoin. So Algod is a perfect example. He made a lot of money in the previous cycle, and he had many posts about it being impossible, not possible, for him to get his crypto onto an exchange and then um, transfer it into fiat because the banks would not allow it. They just simply would not allow it in any amount of money. And he was like, I just can't believe that this is such a big issue. He had all the documentation, reams, to prove the transactions on all that. My point is, uh, it's probably, I mean, it's not going to be easier, but it's the technology and AI and all this makes it trivially easy for um, Bitcoin to be kept, or crypto asset like that, to be kept kind of walled in, out of the fiat financial system, if
Yeah,
governments really, if
there's
governments
always going
want
to
to,
be
right?
there's always going to be outlets. There's always going to
Yeah.
be regulatory arbitrage countries that are like, no, no, you can cash out here.
Yeah, but
Uh,
how are you gonna? It's, we've done research on this. Let's say you have $100,000 in Bitcoin, $200,000 in Bitcoin. That's just reasonably hard to do, right? Like it's anyway. And then the other point though is that I think the thing that made me bullish on privacy coins, or just private technology, is the fact that people with a lot of money are interested in it. I I'm of the opinion that these powers really do direct what is and isn't valuable, and so I do think the fact that they have become interested in it, and you have like
yeah,
information like Peter Thiel has moved his family to Argentina and stuff like
yeah,
that. And that to me kind of shows you, I think, where the direction of travel is, which is, no, we need to have some ability more. We need more obfuscation than Bitcoin has. But anyway, let's get into this
okay.
exploit.
Let's get into
Go
it.
ahead.
So Zcash crashed 25% on the news that there's an exploit, basically a potential um, counterfeiting opportunity. So um, it's a bug that's been around since apparently 2022, and it could have enabled people to effectively mint free Zcash. Now, in my opinion, having looked at it for a couple hours, what's people have been writing about it, it's unclear whether any free Zcash was actually created and any counterfeit Zcash was actually created. But also, it seems that it's impossible to prove that there wasn't any created. So, all right. So, what actually happened? Right, a security researcher commissioned by the Zcash Foundation or something found a critical flaw buried deep in the math that makes Zcash's private transactions work. And interestingly, he did this by basically just pointing Claude's Opus 4.8 at the code, and he had a custom rig set up where powered by Claude, like to look into the code, right? And the under the 4.7 model, it wasn't couldn't find anything. He switches it to the 4.8, and like immediately the code finds the bug. So this is quite interesting. Like okay, like and something that's been around for this vulnerability for 4 years, suddenly AI with a little bit of harnessing on it can find it, right? So just getting very briefly into the the technicalities of what happened. So there's the Zcash has these shielded pools, and one of them is called Orchard, and basically you can think of it like a private vault where shielded Zcash lives. When you spend coins from that vault, you don't reveal who you are or how much you have. Instead, your wallet generates one of those fancy zero knowledge proofs, which is basically like a mathematical receipt that says, yeah, this transaction follows all the rules, but it doesn't show any of the underlying details. So the whole system kind of depends on those zero knowledge proofs being airtight. And the bug was in a rule. Um, there's like a check inside the shielded pool Orchard that's supposed to uh, bind you to the correct secret key for the coins you're spending. So that stops you from like double spending. And then this researcher, this guy, his name's Taylor Hornby, and yeah, he'd been hired by Shielded Labs. It's some component of the Zcash ecosystem to hunt for problems like this. He found there was this gap it was like a missing constraint in the circuit, and basically, yeah, it you could get past that check and effectively create counterfeit Zcash. Now, they fixed it supposedly. They before like it got out there, they did a hard fork. NU 6.2 supposedly fixes it. Just like one line code change. So the official messaging is that there was no ability to inflate the total supply. So the whole network, at the whole network level, there was no vulnerability. This is because of something called like the turnstile caps, like getting out of the shielded pool. It sort of caps how much value can exit the pool back to the non-shielded or the transparent world. But yeah, people are saying inside the pool there could have been inflated balances, and there's no way to prove that. So
There
I think
will
that's the
be.
gist of the story. Go ahead.
Oh yeah, the next hard fork, which is coming up, there will be a way to prove, um, if there will be a way to prove how much is contained in a pool and whether it gets inflated. So they're going to address this problem, and it will retroactively address it as well. So the hard fork coming up will be like, we'll basically have a way to be like, did this exploit cause, um, did this exploit result in any kind of double spends? And in the future, you'll be able to it'll be able to track whether such things happen. Um, so you'll get that zk transparency. Again, though, you have to trust that math works too, right?
Yeah, exactly. And is that going to be is like Opus 4.9 or Codex, whatever
Or
the next?
Mythos, right? Mythos,
Yeah,
is that?
is that going to find some other bug? Uh, so it's cat and mouse.
Yeah. But this goes back. Do you remember several months ago I brought up Nick Carter's take on privacy coins? You remember that? And he was like, "Yeah, I went really hard into privacy coins, um, like 10 years ago." And he was like, I came to the conclusion that they'll never replace something like Bitcoin as a store of value for exactly this reason, which is
Yeah,
you for a store of
auditability.
value for a store of value you need to have complete and utter transparency. You need it to be as simple and clear as possible, because you can't have such an asset class at real size, trillions of dollars and whatnot, have that level of surface attack vulnerability.
Exactly, and
So
so that's
yeah,
why I see this as a potential tailwind for Bitcoin and a headwind for privacy coins as an alternative to Bitcoin.
definitely in the short term, right? Like Zcash, I think will only continue to fall until at least this new hard fork comes out, which proves or doesn't prove. I mean, which either shows that this was exploited or not. That'll be like the first big thing, right? Were there any double spends? Right. I want to. I mean, good lord, you want to know that right away, and it'll also kind of be able to then moving forward, um, have a check on these pools, whether they inflate or whether they have double spends or not. So I mean, at the very least, you can't really see Zcash doing anything but going down until that time, right? At least that's how I read it. In the medium term, yeah, I would also see this as a massive headwind. What you really need, Graham, here is you need like to have provably bug free code, right? Like what if and when we get to that point, which is goes back to my earlier DeFi point, where you can take the you can take the code of a privacy coin and make and have it be provably verifiably provably bug free. Then you can maybe start to pour in lots of money, right? But we're a ways off on that.
Yeah.
So I agree with you on that point.
All right. I think that that wraps it up for today. Yeah, we covered the dire sentiment I think we satisfactorily, I don't know, came to the conclusion that Bitcoin's not completely going to be wrecked here by MicroStrategy or by strategy selling a few Bitcoin. And
You know what?
yeah,
Sorry, one point on that. You know what Dorman said, which I'd love to hear your thoughts. Well, let me hear your thoughts first. He said he thought
I'm
he
trying
thought
to
what
wrap
the
it up here, David.
yeah, just one last thing because this is interesting. He said it would have been a much better thing to do to sell full 1.4 billion straight away than to tease out a 3.2 million um, slug, because he thinks the sentiment would have been the same either way, right? Like, because now there's still this hole in their balance sheet that they have to pay, and so at some point they're gonna have to do something to meet these STRC obligations. So why not just get it? Just have the market take its medicine all at once.
Yeah, I could see that. I guess maybe why didn't they do that? Probably just hopium. Like, I don't want to sell here. It's going up.
It's gonna go up. Yeah, yeah, could be. And it went down.
Yeah, but we'll be all right.
Yeah.
All right. Yeah, keep your eyes on the chart and your sticks on the ice.
Canadians, unbelievable.
Have a great week.